every time we talk about it, it leaves people a little bit confused. So I'm not going to dwell on it. I'm not going to try to over-explain it. What I will say is, if all you receive is Social Security as a form of income, there is no tax on Social Security by itself. So whatever that benefit is, be it $43,000 for those who've paid into the system for a very long period of time, if that's all your income, it's not going to be taxed. It becomes taxable when we start adding additional income to it. And when that income appears, we've got to abide by a formula. And that formula, called the provisional income formula, requires that we take half of our Social Security benefit. So if I'm getting 40, I've got to take half of that, which is 20. And to that, I'm going to start adding the other sources of income that I have. Ordinary income, we talked about what that is, right? That could be income from earnings. It could be distributions in the form of an RMD. It could be a pension. So I will add to the 50% Social Security benefit the ordinary income I receive in a year. I will also add the dividends and capital gains that I receive from that brokerage account. And then finally, I'll be adding in non-taxable interest. Non-taxable interest is the income we receive from municipal bonds. Municipal bonds are generally issued by municipalities. They're trying to raise money for something. They could be building a library. They could be putting down a road, building a bridge. That interest, which is generally not taxable, does get incorporated into this formula for provisional income. Because what we're trying to determine with this provisional income formula is how much of my Social Security benefit will be taxable. If I get this formula right, the second step, or let's first calculate what provisional income is. So let's assume for a moment my Social Security benefit is $20,000 and I'm getting $40,000 in the form of an RMD from my traditional IRA. My formula says I've got to take half of the Social Security benefit, which in this case is $10,000, add it to the $40,000 that I'm receiving from my RMD. So my total provisional income is $50,000. Again, we don't need to get hung up on this. It's just understanding that this is the math behind this calculation is important. We then take whatever our provisional income is, and we're either filing as an individual, which is the top half of this page, or we're filing jointly with our spouse. So let's assume for a moment that our provisional income is $37,000 and we are married filing jointly. So that's the second half of this page. If it were just $32,000 on the dot, none of our Social Security benefit would be pulled into our 1040 and be used to calculate what our tax is. But because I said our provisional income is $37,000, that's $5,000 more than that lower limit of $32,000. So I've got to take half of it. It's not a 50% tax. It's half of the amount that exceeds that lower threshold. $5,000 divided by 2, $2,500. $2,500 gets added to my income and gets taxed on my 1040. Again, don't get caught up in these numbers so much. Happy to explain them more carefully, more slowly if anyone's interested. But just know that there are times when Social Security is taxable and there are ways it gets taxed because we've not been more careful about how we receive our income.